Hi, I'm Jim and I was retired. Have you ever wondered how to simplify your DIY retirement portfolio? Something about last week in Anna Maria Island, Florida put me in the mood. In this week's video, I'm going to discuss how I'm going to simplify my DIY retirement portfolio. Stay tuned. So, in the past few weeks, I've been rethinking my DIY retirement portfolio by buckets with the goal to increase equity allocation to 65 to 70% in the coming year. Now, a few ideas came to me as I was walking along the serene beaches of Anna Maria Island in Florida, and I'm going to share them with you in this video. Now, I originally thought about increasing my small cap stock allocation to 10% and keeping international stock at about 5 and REIT at about 5%. Now, going back to this chart from my last video, Quicken, with its own definition of asset classes, said that I was already nearly 12%. Or 11.94% in small cap stock, which seemed pretty high. And when I clicked into the small cap stock category on that pie chart, it pulls this up, and then I highlighted VTI, or the total stock index that Vanguard offers, and it says that 28% of VTI is the small cap stock category. And it said nearly 20% of the VIG, or the Vanguard Dividend Appreciation ETF, was in the small cap stock asset class. So who knew? My own portfolio for buckets spreadsheet, as I shared last time, shows that small cap was about 6% of my total portfolio, which includes the cash in my bank as well. So, but clearly we're using different definitions. Now, Quicken for Mac allows you to look at the security overview for VTI. And it looks like it's getting its data from Morningstar. In its overview, it notes that VTI is tracking the performance of the CRSP US Total Market Index. In the security details, you can pull this up with its asset mixture details. And it clearly shows 28% in small cap category. Now, as I delved into VTI, it became clear that a lot of us are using different definitions of large cap and small cap when we look into a total U.S. equity index. Whose data do you use? Here's Vanguard's. They share this with the institutional investors of VTI. And these are the data, but do they add up differently? They have small cap here, but which is medium small? And is everything else in the large cap or just the top 70%? When you click for more information on market capitalization with the overview here from Vanguard, it provides its own descriptions of the definitions of market capitalizations. Vanguard provides even less data to its retail customers. Here's the VTI view that they get, and notice it notes the median market cap and plops the investment style into the large cap blend category. Morningstar provides a little bit more detail with its own weights for stock style categories for VTI. And if you add those up, you might get something close, but nothing close to the data that Quicken was using in its data. So whose data should we use? I looked at another website called ETF Research Center, and it has its own take of constituent breakdown for VTI, with small cap at about 1.6% within its own categories. By the way, I'll put a link to this website. It has a neat, cool feature that allows you to compare two ETFs and to see what kind of overlap they have. My original target asset allocation was to hold about 5% of small cap stock. So moving up to 10 would have been increasing it. But what was the definition I was using? I have no idea. I think I need a simpler approach. Why not just set a target here for US total stock using VTI as the index? No more worrying about trying to break up the percentage of VTI that's small cap and large cap. Just use US stock as the category. It'll be a lot simpler. I don't have to worry about asset allocations and dividing it up into two different categories in my target portfolio mix. And while I'm at it, I'm also going to simplify my bond portfolio. I used to track Treasury bills, Treasury notes, and domestic bonds all separately. And then I had TIPS and I bonds. Well, rather than bills and notes separately, I am just going to list it as treasuries. Treasuries that are in bucket 1 will mostly be bills. In bucket 2, it's going to be notes. I have very few bonds. Moving forward, this is going to be a lot simpler to track my target allocation and my current allocation with fewer categories here. Now, also note that VTI is the main ETF that I'm using for US stocks in my IRA, but my 401k doesn't have ETFs. I have to select funds that they offer. And the closest is the Equity Index Fund, which is a broad US market fund. And Marie's Fidelity choice is FZROX, the zero cost total market fund that they offer. In each of those categories, I don't need to worry about how much is large cap and how much is small cap. I'm just going to track them all as US stocks. Life is going to be a lot simpler with this new model. Now, I will also note that I'm not going to make this change all in one fell swoop. I generally rebalance once or twice a year, or at most quarterly. And I'm specifically going to do this as Treasury bills and notes mature, and I'll invest in US stock holdings throughout the year as to move up to that target. Now, I'm also going to change the asset allocations in my 3 buckets as I move to mostly cash in bucket 1, Treasury notes, TIPS, and I bonds in bucket 2, and all equity into bucket 3. Now, I had put VIG in bucket 2 because it produced income, but so does VTI. So I'm going to move VIG to bucket 3 and have all equity in bucket 3. Now, I'll conclude with my standard warning. I have no initials after my name, so take these as entertaining ideas from one educated consumer to another. Always do your own due diligence and seek out a professional if you need one. Bye.